Okay, recording. Good morning, Christian. How are you doing today?
Good morning, Edie. I'm well, thanks. How are you?
I'm doing wonderful. I am excited about this new venture that I'm doing with the CampusNest Investing, and I wanted to get my number one and best lender on the screen and find out some questions, ask some questions. First, can you tell me a little bit about yourself? I want everybody to know who Christian Johnson is.
Yeah. My name is Christian Johnson. I'm with a company called Guarantee Rate. We're probably the second largest privately held mortgage company in the United States. So we have a broad scope of lenders to choose from in any particular situation. But really, we tend to lend our own money, and we are backed by Fannie Mae, Freddie Mac, and HUD, and all those fun players. So we certainly have deep tranches to dig into if we need to. Our focus is residential. We are about putting people with roofs over their heads. My background is a little bit of twofold. I finished up university at University of North Texas. I worked for IBM in New York City for a little while. And then I went and worked in the hospitality world with Houston's restaurants, traveling the country, helping troubled restaurants get back on their feet and get going again. At some point, I decided I needed to settle down, and I sure love Dallas. So I am now in Dallas, and my office is right here in Highland Park. And we've loved being here for the past 25 years doing this.
That's awesome. I didn't know about your IBM in New York City stuff.
I was a young man
Hold
then.
on, hold on just a second.
It was definitely before Giuliani cleaned it up. So it was a bit of a war zone, but that thickened your skin and tested your metal a bit, and boy became a man in New York City. So
Oh, wow, I bet. Oh my gosh. Hold on just a second. I'm gonna have to put the dogs out. So I'll have to cut this part of the video, but hold on.
All right.
Out. Let's go. Come on, we're going outside. They were scratching at the door, so I thought, well, I better let them in. Well, no, they made more noise in. Okay, so that's awesome. I loved your New York state in the restaurant. I had no idea. And I've known
And it's a neat little bit of combination. You get the financial world from working in New York, and then obviously hospitality and learning how customer service works and meeting needs. And so we feel like we've been able to blend those together. Our mortgage company is less about just giving an interest rate, close a loan. That's not what we do. We're more financial planners, financial services. We're going to give guidance. Part of this conversation is, the misconceptions around buying a home for your child in a university town. And so we're here long run. And no time has this been more important right now than right now, because, our interest rates peaked in November, probably mid-eights. And they've slowly worked their way back down. It's going to be a slow burn. There's going to be a few head fakes along the way where people are going to buy a home today and think in the fall they need to refinance. And we're going to spend a lot of time talking people out of refinancing in the fall. Although there's going to be a lot of mortgage companies out there that are just going to try to bang out a bunch of refinances. And that's not smart with their money at that time, because, again, this will be a process to get to a strike point where it's appropriate to refinance. So we will do a lot of guiding at that point in financial planning.
Well, that's exactly, why you are my go-to lender on the mortgage side. So it's, yeah. And you have been able to work magic with some of my people, and it's just, we've known each other for quite a while.
Yes,
all right, so let's just dive right in. So do me a favor, explain to everybody the difference between an investment and a second home loan.
Okay, so an investment property is a property that you're buying to put tenants in purely. So some people do long-term leases where you get someone in there for a year lease or 6-month lease, or maybe even longer than a year. And then there's people who are buying in a lot of resort communities where they're buying Airbnb properties so they can short-term rent them. And you even see that all along Dallas, and I'm sure Lubbock has a fair share of STR, short-term rentals.
Mhm.
on the plate. Those are pure investments. A second home is a home that you plan on vacationing at, lake house, mountain home. I have people in Lubbock that have a second home in Dallas because they have family here and they want to come to Dallas on the weekends and do those kinds of things. Or I have families that have a house in Lubbock that are from Dallas because they want to go to the football games and that's their home that they go to on the weekends for football games. And when that season's over, then maybe they do a short-term rental on the home. But that's really a second home because their predominant use is I'm a Red Raider fan and I want to get out there and watch some football. So, there are those. And then you've got, the different category, which is really probably why you're calling, is the kiddie condo is what we call them. Our office is here in Highland Park. We're right next to SMU. Probably throw a rock there. And we do them quite often. A parent wants to buy a home, or my child's going to be there for 3 to however many years in college, and these rents are just silly, and they figure out, okay, the $2,000 a month of rent times 3 years, that's a lot of money I'm just throwing away to rent. So maybe I should buy a home for my child and consider it an investment on my end. But really, it's their dorm housing, it's their student housing while they're there. Maybe they can get a couple roommates and we could charge them rent and then kind of fluff the kitty a little. So, that's really, it can be treated as an investment property, but most choose to do it with the student on the loan. If the student has built credit through high school or built credit at some point in their life, they don't have to have any income, but they can be the owner occupant of that unit, and mom and dad can then be the co-signers. And that is always plan A. That allows you the least amount of down payment. It allows you the least amount of penalty in the interest rate. Second homes and investment properties are going to have a bit of a penalty in the rate. So it gives you owner occupied rates, gives you very little down payment as an option, and is definitely financially the best way to go. So we always try the kiddie condo path first, and then we start waterfalling other options at that point. But if we're going to, put our child in it and then put some roommates in it, really that's kind of a bit of an investment property. It's not a second home because, although mom and dad would come out, they're probably not going to stay in the home with a bunch of college kids. So, we really want to try to do the kiddie condo first, and then mom and dad are co-signing. And what it does to build that child's credit right before they get launched into the world on their career path is tremendous, because now they got a mortgage on their credit report. They just look super solid. So not only do they get a fantastic education, they get out of college, you had an investment that actually worked for everybody as far as the residential side, but now they have this history of being a homeowner that hopefully launched them into the next phase of their life.
Not only, I don't think people realize this, but not only does that look good for that part of it, but almost all employers are checking credit these days and to get stability for their people they're interviewing. And that looks phenomenal on a student coming out of college, that he's already a homeowner as far
For
as.
sure. And then, if you can take some of those proceeds and apply that towards the purchase of their next property, that sure gets them one leg up on everybody else coming out of college without any equity to put down on a home.
So the kiddie condo is definitely the way to go if possible. But if not, let's go back to the second home
Okay.
business. I know it says second home, but is it truly just a second home, or can they own multiple second homes?
You can have several second homes. You can't have several second homes in the same city. That doesn't make sense, right?
Right.
But you can have a lake house, you can have a ski house, you can have a beach house, you can have a college house, a weekend football house. It just has to make sense.
So just about everybody knows that an investment property usually takes it at minimum 20% down. Sometimes people are requiring 25 and 30% down here lately.
Right.
And interest rates are higher. So what about the second home?
Second home will allow for 10% down, but I'm going to be honest, you're going to really want to put 20 to 25% down. Most people put 20. My recommendation is going to be 25% because the pricing is the same as an investment property. They've moved the
As far
pricing
as
meters
as
over.
far as the
So
interest rate's concerned.
second home pricing is going to be the same as an investment home pricing. It will allow for less down, but it's still going to hit you in the interest rate.
Hence
So
the reason to do kitty condo if possible.
that's why kitty condo is so important right now.
Okay. We discussed the difference between the investment and second home. Let's talk a little bit more about the non-occupying co-borrower. Obviously we know it builds the student's credit, something, really well. And if the student has zero income, then you can't use, if it's for a co-borrower, you can't use any kind of rental income that you're going to get from a roommate, correct?
Right.
So you have to be able to have the right DTI in order to
Mom and dad need to be able to float the
both
note
loans
on
for all
paper
everything that they have.
for all of it, their house, their second houses, their cars, and the new house.
And for those who do not know, DTI is your debt to income ratio. So I just want to make sure that's out there. Most everybody that we're speaking to at this point all understand all that. So we kind of do little initials there. I think what else would so say you've got a sophomore in high school and they're going to want to not have to pay student housing when they go to college. And for most all D1s and most D2s, freshmen usually have to stay in the dorms no matter what. You don't have a choice in that matter. They can go ahead and buy that second home if that's what they're going to go do and visit, while they're there, that's fine. And then the student can probably start it in sophomore year. But what should they be doing to prepare themselves now as a sophomore in high school to get prepared to purchase this home, for both if they want to do let's do kitty condo. To get a student prepared to be able to do a kitty condo, what do they need to start doing their freshman, sophomore year in high school? Parents.
So we need to get them on some debt. I hate to say it, but mom and dad may need to put them on as an authorized user as a credit card. May need to get a credit card with mom and dad co-signing the credit card early on. If they're at some point going to buy a car, if there's going to be some financing, then put the child on the car as well with that financing. Do things that help build credit, that don't let them run amok and overextend themselves and have credit default early. Obviously, this is a great opportunity to talk about responsibility and building credit and wealth.
But it is also a risk as well if they do.
But there is a risk, and it's kind of like my sister when she went off to college and she had a checkbook, and as long as she had checks, she thought she had money. So she bounced a bunch of checks her freshman year. My dad had a long conversation and we pulled that checkbook back. So, those are good opportunities to have some really life-changing conversations.
There are a couple of banks out there, and I'm going to list one because I know, and this is not really a plug for Capital One, but I know they have a student credit card that allows students of sophomore age and older, I think they've got to be 16 or 17 or older, to get their first own credit card as a student, and it's only a $300 credit limit. That is how I started my daughter out.
Yeah.
When my daughter graduated college, she had almost an 800 credit score. She had her own car. It's a very good little credit card. She still has that credit card. It still only has a $300 credit limit. She never raised it. Actually, you can't raise it because it is just a student, so they're not allowed to raise it, I believe. She still has that little credit card. She said, I just use it to put gas on and pay it off every month. It's perfect.
There you go.
So that's what I got started with her. And within her probably middle of her freshman year, she was pre-approved from Chase for a $2,500 credit card. And then she built it from there. She now is an American Express holder and a Discover holder, the bigger cards.
But you have to start somewhere, right?
You do have to start somewhere.
So there are opportunities out there to do that. I
cannot suggest Capital One for the students. And if for some reason they can't qualify for that student one, US Bank has a great security deposit card that you can put down. So, okay. Anything else you think that people need to know? Let's go back to the parents now. What do the parents need to do to prepare themselves to buy a second home from sophomore year to do they need to get rid of some debt? Do they need to close any accounts? What do they need?
I would always start that process early. Start these conversations early. Get pre-approved long before you think you need to get pre-approved. So you have a game plan and you know what you need to have put aside for down payment, for closing costs, what your target's going to be, price point. Just start getting educated on the market, because oftentimes we're buying in cities that we're not very familiar with, right? So you have to kind of build some confidence in the process. And the only way to do that is just get a jump on things early. The worst time to go out and do that is right before in enrollment, and you're in a panic, and you're out there with 100 other people that are in a panic trying to buy something suddenly. So take the process slow and let it mature, and learn as much as you can in the onset, in the beginning.
Okay. Well, I think that does it. We're trying to get this all sent out for all schools. We're getting ready to work on Oklahoma, OSU and OU, and
cool.
to work on Texas State. We're getting ready to work it out for Arkansas. These are schools that I have specifically been asked, please help find the sources and resources in those states.
Oh, fantastic.
So can you write in all those states?
Sure can.
Okay.
We're good to go.
You're in all 50 states, right?
You are.
Okay. So that's what I wanted to make sure that you can handle this. And anybody that I'm bringing in, I am bringing a local credit union here in Lubbock, which, a lot of people like to stay local. So I am bringing in a local credit union, and I've got a standard bank for those who need hard money or some other type of lending. But as far as lenders, I wanted to make sure I brought you in because I knew you were licensed across all the states and can handle anything that I bring in. Same thing with my financial planner that I brought in. She is as well. And I need to introduce you to, by the way. I think we've got everything covered. Do you think there's anything else, any bits and pieces of information that I might want to put out there?
No, certainly our contact information. If
gonna
anybody
go on the
needs anything
website.
or wants to initiate the conversation, I know we're in Dallas, but at the end of the day, this is a huge financial sector, and this is where a lot of our clients want to have all their finances lined up and their people for those kinds of decisions. So we're available anytime to initiate the conversation, at least get things going.
Okay. Yes, your contact information, we'll have a resource page on the website. So all your contact information and link to apply and your
Excellent.
email and everything will be on there. So they will be able to reach you.
Fabulous.
Christian, thank you so much for jumping on with us today. I so appreciate it. I
You're
will
most welcome. My pleasure.
definitely send everybody your way that comes my way. and anybody that you have going to school, make sure they know, okay, we've got a realtor in Lubbock. Actually, I can refer. We will be interviewing individual agents, and there will only be one agent in each area, but we will interview them, and they will be very well vetted. So anybody that sends somebody my way can trust that I am sending them to a agent of caliber. So, all right. Well, I appreciate it, and I hope you have a wonderful day.
You too. Take care.
Thank
Bye-bye.
you.